Welcome everyone back to another episode of The Whole Perspective. My name is Kevin Delarty, Chief Lending Officer with EPM. As always, joined by Kenny Phillips, my right-hand man and Senior Vice President of Wholesale. Today we have a legend on the podcast. Doesn't need much introduction, but Kenny's going to try to do his best and do you some justice here, Bill.
Come on, Kenny.
Let's do it. Well, let's welcome Bill Dallas. Bill's responsible for leading more than a dozen mortgage banking, fulfillment, and financial technology companies over the past 35 years, with over 40 merger and acquisition transactions, including First Franklin, Heritage Bank of Commerce, Ownit Mortgage Solutions, Skyline Home Loans, InterThinx, MindBox, and now Cloudvirga and Finance of America. He and his leadership teams have navigated virtually every business cycle while building some of the most admired mortgage lenders in the country. Today at Dallas Capital, he's helping other lenders build their companies. Welcome, Bill.
Hey, thanks, Kenny. That's a good job. My mom couldn't have done any better than that. That's
perfect. Bill, I didn't know this about you. I was doing some research and, kind of read some of the background on a friend of ours, Jay Duran, the Culture Man.
Yeah,
on Jay. Podcast. And, this podcast really allowed me to open up about where I come from, how I got to where I am. And there was things that, going through tough times isn't something that everyone shares to get to where we sit today. So if you could just share with some people, because they look at today and they're like, wow, I see Bill on LinkedIn. I see him here. I see him there. This guy's got it all together. But the road wasn't easy to be the Bill Dallas of 2023.
No. And I don't know about you guys, but I was born my parents are West Virginia. So I'm from really one of the poorest areas in America. And if you've ever read the book Hillbilly Elegy by J.D. Vance, it sort of is the migration from south into Ohio. So I ended up most of my life in Ohio, where I grew up, played sports. My dad and mom, luckily for me, my parents were educated. So my dad ended up being a school superintendent. My mother was my principal. So I was really lucky from that standpoint. But coming from poor, humbling, we had nothing, right? And I graduated from college at Bowling Green in undergrad, had no idea what I wanted to do, blah, blah, blah. And then, eventually in the summer, I was going to go to law school in Ohio. And I started working in a real estate company over the summer and just fell in love with real estate. And the rest is, I started training. My only job, other than all the things that Kenny talked about of starting your own business, was I trained realtors for a brand new franchisor, Better Homes and Gardens Real Estate Services. So I traveled all over the United States, but in that I learned sales. Right. So I was taught by the best, Jerry Bresser, Tommy Hopkins, all these folks back in the day that were icons. I think even most of us were going to Zig Ziglar things, blah, blah, blah. But it was so much fun. And then moved to California. The Rust Belt was rusting. Moved to San Jose to run a real estate company. And we had interest rates went from 10 to 20 in about a day. And it shut the world off. And so I've spent my career going from 20 to 2, and now we're at 2 going somewhere, right? And so I think a lot of that would be applicable to what we're talking about today. But like most of you, I went to law school at Santa Clara and started First Franklin. And so at night I'd go to law school and then I'd originate loans during the day. So I'm like you. I was a loan officer, the top loan officer at First Franklin. And so I spent my entire life originating loans and then and what I always found was the products didn't fit my customer. So I was constantly trying to create mortgage products. And then as my businesses grew over time, I got the opportunity I was all in agency for a while, right? Where you guys have been over the last few years. And then I spent 20 years in non-agency where I didn't sell loans to Fannie Mae and Freddie Mac, which is, I think, where we're going a little bit. So, it's sort of quick and dirty, 5 kids, normal guy, just trying to help other people be the best that they can be. And that's been I think I was born and raised by teachers and coaches. And so I think coaching, helping people get to where they want to go has made all the difference in my life. I know.
Yeah, I think it's those intangible traits that you get instilled into you when you're growing up with your parents, with people around you, with being new into the business. And it's something that, we've always prided ourselves in leadership is, I love these leaders that have never been in the trenches. And they say, well, I started off as a manager and I'm still a manager. I started off as an account executive and then I became a regional sales manager. Then I became a vice president. Then I became a senior vice president. Today, I'm a chief lending officer. And I enjoy getting back in the trenches just as much as anyone of my account executives. And I think that's what separates leadership. And you had said it, like I started off selling these same loans I'm asking other people now to do. And so you're not afraid to get into the trenches. And I think that's something that a lot of leaders, they think when they graduate past that, they don't want to go back to doing that and that it's too good for them. And when I hear you say that, it sticks out to me. And I think that's why people think so highly of you, because I talked to a guy that worked for you the other day and I said, no, we're going to have Bill on. He's like, amazing leader. There's nothing that you won't ask him to do that he's not afraid to do. If you say, you mind calling this broker, we screwed up on a loan, he'll pick up the phone and do it. Yeah. And that's what makes people in this industry that I scratch my head sometimes. I'm like, that's why you guys aren't succeeding, because you don't understand the challenge and you don't own, the transaction. You're not owning the experience. And so that was great that you say that, because I said to him, I said, well, did you trust him? He goes, hell yeah, I trust him. The guy's a legend. Of course I want him to get on the phone with my broker. It was great. So, thanks for sharing that story, because now I get where it
comes. And I think for you guys, it's like, for me, it was the same, right? So as you get bigger, like EPM, right? So now you're getting bigger. And as you continue to grow, there become layers. The thing about what I've always thought, the P&L thing, right, is not a profit and loss. It's people and leadership. So eliminate the layers between you and your people in all costs, right? I don't have an assistant, right? Not that Jenna isn't just perfect, right? Or something like that. But at the end of the day, I want Kenny, if shit's happening on a deal. And so when I started even at Finance of America, because it's massive, right? We had 5,000 people. We had people everywhere, right? And nobody knew what they were doing. And I basically came in and said, I got 3 things that we're going to do. And 2 of them I'll share. One was tip of the spear. If you don't call me back, here's my cell phone, 805-390-7468. If you don't call me, if you got an issue and you don't call me, shame on you. Because if you call me, I'm calling Kevin, I'm calling Kenny, I'm calling everybody to make sure we get this solved. And then I think what I told the LOs and everybody in that business, I am going to spend my life 2Xing you. I'm going to double your production. That's my job, right? To 2X you. So no matter what I do up here in the ethereal CEO land or president land, my job is to create products, services, things that jump at an LO so they can basically solve the issues that are coming at them from their customers. And I never forget that. And I think as people, I think what's happened in mortgage a little bit, you guys can speak to it a little bit too, right? With all these net branches and P&L models and all of this other stuff. I mean, basically what's working and what is always working is a producing manager. And it's the hardest job in America because there aren't any player coaches anymore. I mean, Bill Russell quit and all these guys that were really great at whatever they did, it doesn't work out. So the toughest job is that. And so I spent all my effort trying to train the manager, right? That manager. And that manager then, because if you want to recruit, you want to retrain, you've really got two things, right? You're either going to grow. You either have to have more customers and more loans coming at you in some way, shape, or form, or you have to have more LOs, right? There's only 2 ways. And so I started there with each of my managers and just says, well, so what's your strategy? If you're going to recruit, you got to strap it on because recruiting takes forever, right? And it happens when you least expect it. So recruiting is just a daily occurrence. Owning the point of sale in your area, in your hood, is something else, right? And if I control point of sale where I'm getting leads and I can give them to my LOs, I'm in charge. And so I try to teach them how I did it, right? It wasn't like some miracle. It was like, okay, it's basically like you were saying, I'm a grinder, man. You just work, but I'm in the presence of I tell them, you have to be in the presence of the prospect all the time. And you're not.
Yeah.
You're just not. You're sitting in your desk, you're going somewhere else, you're reading something, and Zoom and all these other things, they give us a lot of benefit, because I do think if I were doing a SWOT analysis of an LO, I would say the difference between us and Rocket and us and United Wholesale, where you've got a bunch of brokers, blah, 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 all of that, the difference is almost always that we see and have the opportunity to see and be with the customer.
Right.
And they don't, right? And so why in God's name are we not playing to our strength? And even if it's a Zoom consult or it's something where I'm in the presence, little simple things is I just come to closing. Well, in California, nobody even knows that the thing closes. Right. It's like it's closing at an escrow company. Nobody shows up. I'm telling you, I'm always at the closing. I'm always with my customer. I'm always asking them for a referral. I'm always asking them what I could do right, what happened, what didn't happen. I don't need, all of that stuff is just the essence of being an advisor. Right. And then I've got a whole nother shtick of, okay, why do we act so transactionally and we talk so relationally? Right. And then we just dump the customer at closing versus, so what do you have? What tools do you have to retain the customer relationship post the closing? Because closing should be the opening. It always has been. I don't know why we call it a closing, but at the end of the day, it's like going to the terminal at the airport. I'm not going to a place where I want to die. It's not happening. But my whole focus, and I think helping loan off in this environment, now we're just in tough times, right? So in this environment, what can I do to step it up a notch to get in front of all the other LOs and all the other people who are trying to get at my customers?
If anyone that's listening isn't taking this advice in this market, they're crazy, because they're missing out on opportunity. And it's something you said there that I'm super passionate about. And I say it to the salespeople this way: it's conversation over communication. Mm-hmm. So let's make eye contact. Let's have a conversation. I want you to see how animated I am. I want you to see that I'm passionate and I'm fighting for you. And the other thing is, people are always afraid to ask, what can I do better? That used to be my line. I would walk into a shop and say, okay, what don't you like about me? Like, whoa, who does that? What do you mean? Like, well, if you're only going to tell me the great things, but how do I improve? What can I be doing better? Right. Where's my weaknesses? And I think that is the best advice, because to your point, right now it's a tough market, and people are sitting around saying, oh, well, me, oh, the rates, this, that. The people that will win are the people that are out there in people's faces, that are trying to improve, that are getting better by the day, the leaders that are willing to get in the trenches, like you said, and let me show you how to do this. I'll get on the phone with you. Let me show you how to do this. Let's do this.
Well, and you were, in great times when interest rates were dropping and everybody was growing, a company like EPM, like when I was First Franklin, I can't grow in those environments. I don't have the same capital base as Wells Fargo or Countrywide or one of these companies, right? So when we're looking at today, these big behemoths, like the guys that you compete with, from cross country, little middleware people, to move on up to Casey Crawford, Victor Girardelli. You look at Loan Depot with Anthony Shea. These are all people that brokered loans to me. Dan Gilbert at Power, brokered loans, and he was a shitty broker, right? So it's like, and now you've got these guys from Chris George on down. And so when you look at these companies, this is your opportunity at EPM, because when the market is so disruptive, their only option, it's like my best joke in mortgage. You want to own a very small mortgage bank, buy a big one and wait. Because big ones, when markets go into this, what's their option? We just throw people out of the boat. And they all of them say the same thing. We're going to throw people out of the boat and take market share. Well, what does that mean? Well, to me, if you're at EPM and this is your opportunity, right? Because you don't get many opportunities when the dislocation and the confusion is so bad that people are just, exiting and trying to figure it out. So I think you guys are onto something in that. Use this as the opportunity to strategically grow, right? Stick to what you are. I am a big Jim, Collins guy, where if you draw these 3 circles in good is the enemy of great. And I think the one thing that I've always said with myself was, I just want to be great. I don't know where it came from. I have no idea, right? But I do not want to be mediocre. And every team I played on, any place I've been, it's like, we just try to excel. And I think if you can take those 3 circles, which I think you guys probably have, and if you draw them, right, the first circle always is, what's my business model? What am I, what can I be best in the world at? What's my business model? And the third one is, what am I passionate about? And if you aren't god awful passionate about what you're doing, and you don't have a good business model, and you really aren't, in this circle, because in the middle of those 3 circles is your BHAG, your big hairy goal. It is your mission statement. It is what you're good at. And so I'll give you a good example. Finance of America just got out of, I knew they weren't committed to forward mortgage. They just aren't passionate about it. They're passionate about products. They're passionate about reverse. They're passionate about fulfillment, home improvement. But when you would hear somebody talk about the mortgage business, it was like blah, 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 right? And it was like, oh my God. I love the business. I love people. I love going through that process. So I think this gives you the opportunity to play to your strength. And I think there's a whole bunch of strategic stuff that sort of is out in the ethereal parts of mortgage that are telling you not to. For example, direct to consumer, go direct, use technology, use all these things. Yeah, all those things are great, right? But that's not what drives a truck at EPM. Right?
Yeah,
it's in the second seat, dude.
Absolutely.
You're not trying to be a fintech company. You're trying to be boom. And I want the people driving that car in charge of the business to be wholly focused on what a loan officer needs to do and how we can help them right now navigate the most gnarly, messed up market in the history of mortgages. And I've got like 500 things I would tell them to do, right? So it's not like, oh, maybe I can think of one, right? No, I got a bundle of them, right? It's like, but I think if you can engage that passion and say, okay, yes, this is time. This is your time. So how do you do that?
Right. So you touched on technology, and we're big on relationship over transaction, right? And when I got in the business, and Kevin got in the business 20 years ago, you really had to go sit in a broker shop, earn their business. You pretty much sit there all day and look at files. Today with technology, you can touch so many people. In your opinion, is technology kind of a hindrance on that relationship over transaction because you can do business with so many people now?
No, I don't think it's a hindrance. I think marketing technology like Total Experts and Simple Nexuses, I think where we've missed it as an industry is mobile. The whole world is mobile and we're not. Texting, for example, it's illegal. It's antisocial, immoral. I talk to any compliance person, they'll tell you, holy shit, if you actually market using texting, you're going down. So I think, and if you know me, I built Cloudvirga because I used Encompass and it sucked. And why? Because Encompass basically, let's go to the Bible, right? To the history lesson. It's Genesis 2000 that's sort of strapped to an Apple II product that was smushed together called Encompass, right? Years ago. And it smushed together. They didn't change anything. And it's a processing software. So how's that helping a loan officer? So So what's a loan officer have to do? Price and quote and gather a bunch of shit. Right. And so what I found was if I could take pricing, which is over an OB and some other thing, and I could bring that into an environment where I had all the products and services, I could get a disclosure out in seconds. You could do it. And that means you could get a customer to commit faster. So technology, I think that's important. The faster I get a customer to lock from app is my game. Yeah. And how do I do that? Well, now I've got to disclose 542 times. I got to have an intent to proceed. I've got to have all these things. And none of that was built into the system. So I built all of that. And but my goal was to lift the LO out of it so they could do it. What I found was the number one problem is income. And so I spend my life, I have just basically with one rule, is that the guidelines were built for boomers and they've sort of met millennials, right? So you've got this whole deal where you've got nobody qualifies. Nobody. And now I've got the house, which if you think about our industry where we're built, mortgage banking 101, Fannie Mae and Freddie Mac, primary occupant, owner occupied, 30-year fixed. Have a job. Everything's built off of that. 2-year stable employment history, all that bullshit, everything that everybody gives you. So when you try to build technology around income, what do you find? Okay, I go to Kenny. So if I do a deeper dive to a customer, I've got an unmarried couple. Maybe they're married. Now I've got co-borrowers. I got a co-borrower. They all got 5 jobs. Everybody's lost one over the last 2 years. And now I've got to try to qualify. Well, do I want to go to non-QM guidelines that have to be, put you at 8 to 10? And what's happened with the business is as 30-year fixed rates have gone to 8, the non-QM loans have gone from 12 to 8. And so what you're going to see is what I'm good at, which is creating income and asset guidelines that you can technologically, in a very simple way, underwrite. If you could do that, technology is a winner. If not, you go old school 2 seconds because the loan file is so bad. I've got all these different things. I've got a person who's self-employed and employed at the same time. And then I've got the house. Well, the house is no longer an owner-occupied, palace. Right. People are renting their house. They're living in their house to work, and they live in the house as an owner-occupant. So you've got a multi-use. Right. So if you think about it, our agency business is built for vanilla, 30-year fixed, primary occupant, and we are going away from that. We were in 96, 97, 98, from 96 to probably 2005 or 6 when it blew up, the world moved away. What that was telling you at that time was that people weren't qualifying then. It's just you can't do no income, no asset. You have to qualify. The customer has income, right? They just can't use it. And so my goal, I think, with you guys, what I'd love to do with EPM is, infuse you with the passion for products that allow you to do that on the right, and then how to do it on the left, so that all your managers, all your leaders are speaking the same truth on how to do it, right? And I think then it just allows you to get better and better and better. And when everybody wants you to get away from what you're good at, don't. Just do it better than anybody else can. And most of that is just open your heart to helping people grow and get better at what they do. And I'm telling you, if you don't, and that's the problem with mortgage, is there's a whole bunch of capital that's come into it and people come into it and they look at it at numbers. And there's no harder job than probably being a chief lending officer or a regional VP. It's like, oh God, what do I do, right? Versus when I was most effective, I was in the presence of a prospect, helping Kenny get the deal done.
Yeah,
Right. Okay. I love that.
I think it's simple, and you nailed it. It's what has separated us from everyone else. It's just what you said. It's really, we brought everyone together. We don't use the word sales and ops. It's sales and sales support. We all work together to make sure that borrower has a great experience, and make sure that broker, if it's on the wholesale side, has a great experience. So we haven't reinvented the wheel. We just have said, we're not going to be like everyone else and only touch a file one time. And if you don't like it, go somewhere else. And the other thing I wanted to bring up is, by the way, you'll never find that what the word is, because I'm still looking for it, of what makes you want to be great. And I always say it's it. You get it. And if I have to tell you what it is, you don't get it.
Yeah.
There's some intangible trait, and I struggle with it every day of trying to explain to people why I'm so crazy and why I'm so passionate, because I want the next level. Like, well, you're bucking the trend. You're doing 10 times in your wholesale channel than anyone else is doing right now. Why is that? Because it's it. Yeah, I can't explain it to you.
But you're onto something, right? And so I sort of did the same. So my first trainer who trained me was a guy by the name of Steve Brown. And Steve Brown had this management training, sales training. And one of his axioms was that, people, you can't motivate people. Motivation's internal. So all we can do is change their circumstances a little bit so they feel a little better about themselves. So the trick I found, and this is my own solution, was when I found the 10 who really knew what they wanted to do and were getting after it. You know what I've always found is the 10s, no 10s. They don't hang around with 8s and 5s. They hang around with 10s. So hire everybody they know. Yeah. Right. And what I did was I went, I'm not going to tell everybody how I'm going to do this. So I started teaching class at De Anza College, and they had no real estate classes. So I meet this guy, I said, look, I want to teach real estate finance and principles and properties in these classes. Nobody had them at the time. Well, suddenly I am teaching 100 people, 200 people a quarter in San Jose. And I'm hiring the 10s. Right. And then if I'm not hiring the 10s, everybody in that class walked out of that class. The other 99 walked out of that class saying what? Bill Dallas is an expert in mortgage. And they're telling everybody. And off I went. And I went, wow, this is pretty simple. And then when I was going to law school, I meet these people from Santa Clara. And they were football. I really, and this may sound weird, but I found football players, because I was a football player and an athlete. I found football players when Santa Clara had football, and cheerleaders. They were the best people. Now I look back, that group, when I got into that funnel of hiring the friends of the friends, it just exploded. And so I think, Kevin, when you've got a 10, that 10 has to be either a great recruiter or they know other 10s. And what you don't want to do is 10s hire 9s, 9s hire 8s, 8s hire 7s. Before you know it, you're Finance of America, you got a shitload of 5s, right? And you just go, what are we doing, right? We need the 10s back, right? It's like, it's terrible.
That's great. That is great.
But no, I love what mortgage. Look, at the heart of it, owning a home is the 8th wonder of the world. It fixes everything. I have 5 kids. First order of business as dad was to try to help them make the transitions out of school to owning a home as fast as they could. And then I taught them all to buy a property big enough that you could rent the downstairs or a part of it, so you have somebody else working all month to make your mortgage payment, not you, because you're going to be bumpy here for a while. Right. All my kids had the same thing. It's so funny. And they all go, Dad, why do people not do this? I go, I don't know. I mean, I've been telling them for 40 years.
Because they got parents that are 7s, 6s, and 5s.
And then they get divorced and they got 2 halves, right? You got like a quarter by the time you're done. No, that's funny.
Good. Bill, so, this market is just turbulent, right? You said you went from 20% interest rate when you started down to 2% now, and it's starting to creep back up, and everyone's hanging their hats and hoping that rates will reduce and save the markets and refinances will come back. And, what's your biggest advice going forward? Taking rates out of the question, what do you think leaders and companies should do in the next 6 to 8 months?
Well, I'll start broad, Kent. That's a great question. And I'm all over what I thought this would do probably 3 or 4 years ago. So if you look at, America's getting older. So the first thing is you got to embrace reverse. Why? Reverse is, there's 10 to 15,000 people a week getting, turning 62. So you guys teach people with VA loans to do VA. You teach people with FHA loans to do FHA. Well, look, if you're over 62 or you're probably 60 to 70, it makes no sense to have all this equity and have a payment, right? So the first thing is, I think you're looking for solutions for equity because there's more equity in the universe than there's ever been. I mean, when I started way back then, nobody had any equity, right? So you now have an American population of homeowners who've got record amounts of equity. So the strategy is, how do we extract it? First one is, if you're older, if you're over 62, you're going to extract it by understanding that product. It's a high margin product for the company. It's a high margin product for the industry. It's just very misunderstood, right? Nobody really understands it. So simple, that's start number one. Number two is, I think what you're going to see is you're going to go from 100% agency, right, to 60% agency. So you've got to understand non-agency. And non-agency is, how do I extract? So I'm noodling on, how can I do a reverse for people under 62? Because I don't think anybody wants a payment, especially at 10, 9, 8. Nobody wants to, hey, go get a HELOC at 8, right? And let's just do a shitload of HELOCs. Okay, we'll lose the company, we'll lose our money. The banks actually do this really well. We don't. So how do we play? Well, I think what I'm seeing in these products is this move to equity sharing. So I actually think HEX, we call them heroes or different products. I actually think, and this isn't for everybody, but it is for, if I paid cash, which 40% of America paid cash for a house, during this, and now I've got $500,000 worth of equity or $1 million worth of equity. Do I want a massive payment? No, I probably don't even qualify. Okay. So how do I do that? And so I'm working to bring investors into the market to equity share with you in different ways. And basically an equity share is better than a second. You have an investor who gives you money, you take the money out, and you don't have a payment, and they sit there with you waiting for you to do something for a period of time. I think that product will revolutionize what we're doing. It's not going to, it's not for everybody because, okay, I can hear people already on the phone or on the, our listeners going, I would never do that. I mean, really? So you've got $500,000 of equity. Your kid's going to college. You need to remodel. So what are you going to do? Take a $250,000 second at 10, 8, 6, have a big payment? Those loans are seconds. They are generally shorter in duration, higher in payment, and have a lot of risk associated with it. Well, why not bring a partner in who actually emotionally is alongside you as an investor? They want you to win. Right. They want it to go up in value. They want you to do whatever you want to do to the house to make it better and sit there. And when you want to sell, we want to sell with you. Right. So I actually think that business is going to explode, and explode meaning it's probably going to be 5 to 8% of the market. Wow. And it already is in some places. And then I think the rest of it, for Kenny and Kevin and for everybody who's listening, we have to solve the income calculation for guidelines. So what I recommend is, so what I was doing at Finance of America, what I did at Ownit, what I did at First Franklin, is I basically use this as I say, you have to have one set of underwriting guidelines that does 500 things, not 500 products to do one thing. Because you're going to blow up the back end of your business. We already have. Underwriters are doing 1 to 2 loans a day. You got to be shitting me. I'm paying somebody a couple $100,000 a year to do 2 loans. Oh, Kevin, Kenny, get on your horse. We're underwriting these fuckers right now. It's like, I mean, I'm not going to why would I do this? It's unscalable. And it's not fair to underwriters, right? They don't, so every day, what are we going to do? Start launching. If we're going to go from 100% agency to 60% agency, then 40% of this is going to be in products and services. Do you want that to really be 40 new correspondent relationships? No, because you'll blow up the entire organization. So the trick is for EPM, and what I do with companies is I teach them how to build one set of underwriting guidelines that does 500 things. Then we go to investors and make the investors buy our product. And if we're really good at it, then we securitize it, right? And we create it. So at FAM, at Finance of America, I had a unit. So what was the big, so if you think of Finance of America, the big win was reverse. The second big win was fix and flip, which we do really well, commercial, other. The third was really doing non-owner occupied when the agencies, basically orphaned it. Right. And the agencies, I think what's going to happen with Fannie Mae and Freddie Mac and Ginnie Mae is the government's going to wake up over this period of time and say, look, you can use agency loans one time. That's it. You can't keep refinancing and doing that. It isn't fair to Ginnie Mae to have Fannie Mae and Freddie Mac cream off the top. And so that if you think that the federal government is really using its guarantee to allow homeowners to get low fixed rates, well, that doesn't seem to make sense with banks and independent mortgage banks and everybody else. It's just that independent mortgage bankers are basically disciples of Fannie Mae and Freddie Mac, and we're not very good at non-agency. And then you have Wells basically say, sayonara, I'm out. Chase already said, we don't like it. I mean, they basically don't like us anyway and don't trust us. So how do we do this? And if you look at all these homes, everybody's renting a portion of it. We can't use the rental income. Really? Or I get a new job. I can't use my new job. I got to use some frickin' back 2 years of average of bull. And what have they done with your pay? What used to be base pay was everything. Now base pay is fraction. And maybe I get a bonus, and maybe I get this, and maybe I get that, and then I have this deduction. By the time I'm done, I'm going to go criminy sakes. Nobody's going to qualify.
That's right.
And so my view is, if you got it, flaunt it, give it to them. If they have income, figure out how to create guidelines and rules that give the income to the customer. Because over the last 10 years, what we figured out how to do is give people obligations. And we are really good at it.
Yeah.
We can, you got credit, you're pulling credit while you're in application? Oh my God, explain $2 on this. And why did you do that? So I think we're really good at obligations. Let's get really good at income. But you have to tackle the base things, which are generally just standard income. Because if we all don't do a bonus the same way, and if we all don't do overtime the same way, and if we all don't give people roommate income, rental income, and the max, you can't take 70% of it, 50% of it. Why am I doing that? I got 100% of it. I'm trying to get a loan, you moron. Yeah. And, by the way, this is the best it's been. The other thing that can maybe give you solace is what we've learned in mortgage over 40 years is that income is not, listen to this, income isn't correlative to default. There is no correlation to DTI and whether you default or not. There's a lot of correlation between severity based on LTV. There's a lot of correlation on FICO scores. There's no correlation to your DTI, because when you lose your job and when you go into the barrel as a consumer, who knows? So, I mean, what? We're going to try to predict that? So why are we using historic income information to predict something that isn't correlative? Well, that's your federal government at work for you. And then they'll just put a bright line. Okay, 45, 33. I mean, I've been in this 40 years. It started at 8. I don't know. Ask your people on the phone. I started, it was 1823. Then it went to 2328. And then it went to 3336. And then it went to 39. And what are we trying to do? All the loans come in at 39, right? Or the tough ones. So how do we do that? And that, I think, takes the 40% from going from 100% agency to being able to do that. And that helps every loan officer at EPM, right? Because we can get a deal done faster. It's our product. Our product, then we have a stable, we all think the same way about income, right? Not all over the place. Kevin and Kenny can train it to new people who come in. This is how we do it, versus we just throw them into the abyss. And they get a customer, and that customer then doesn't fit, or they ask a certain question, and it's like, oh my God, now what? Which I think, so we're going to go, 2023 is going to be about going from 100% agency to 60%. And the companies that actually have products and services to offer that 40% to its loan officers are going to win. And the others are going to go, holy shit, what happened to me?
Yeah. Well, we also have a staple question. I always love Kenny this is his staple question we ask every guest. So I'm excited to hear. Listen, you got me fired up. I'm not going to lie, Phil. I mean, we both, we both have it. We both get it. And it's like a dog that smells another dog when he comes up to him. He knows not to mess with that dog. You're that dog. But Kenny, what do you ask?
Yeah, it's a tough question to ask. You got over 35 years in this industry and so much experience in the M&As and everything else. If you had one thing to define your success and your value in industry, what would it be?
Each day's a new day. Don't rest on any laurel of anything that you've accomplished. It's nothing. All you have is your ability to help another person. And if you can help, I don't care if it's the lowest. I mean, it doesn't matter race, color, creed, religion. It doesn't matter if you're related. It doesn't matter. I just help everybody. If I'm picking up trash, to helping a person work out, to trying to help families figure out how to stay connected, I think as you sort of go through mortgage or your life, you end up with a couple of staples that matter. And the one thing that is people matter. Right. And it is just trying to understand that the struggles that they have are far greater. I mean, somebody always asked me, was it easier to be the boss or to work for the boss? And I said, it sucks to work for the boss. Right. So my job is just to try to say, look, I basically have taken every org chart and reversed it. The CEO is at the bottom, not at the top. Who's at the top? Every line level employee that works for me. That's it. And the solution is make them better. Help them succeed. Understand their problems. And that doesn't mean, look, because I know you guys, we're in this market right now where you are laying off people, trying to figure out who wins. I mean, the way I explain it to people is, look, we're looking for 10s as an organization. But at the end of the day, if you're committed and you're working hard, you have a place here. it might not be where you are right now because I've got to retool you to do something else. But at the end of the day, I'm trying to keep the best and the brightest, but I'm trying to help them. So I think, Kenny, helping other people is solution is really a good life.
Yeah, in that comment, you said a lot of things that we do here, right? Where we consider ourselves the basement. Eddie's always saying, I'm the basement, we're the basement. Then there's the first level and all the way up to the top. And we try to get 1% better every day. And, some days I go home at night and like, oh my God, what an amazing day today. And that's how long it lasts. I close my eyes. I tell people, I don't get out of bed unless I'm 100%. I got out of my bed this morning at 4:30, worked out, finished reading a book, and I was here at 6:30. Why? Because today I got to beat yesterday. So it was great. I had a great day. It was great. We had the best week in wholesale that we've had since I've been here. Mm-hmm. I should be today just most people, if I didn't have it's the thing that we can't figure out what it is. If I didn't have that, I'd be home today laying in bed, more like most people would be. But today is how do I beat yesterday? How do I get one more deal that I did yesterday? So I love that you said that. It's spot on to what we believe here. I feel like a better leader today from talking to Bill Dallas than I was yesterday.
That's great.
So I want to thank you for your time.
You're welcome.
Can't wait to see you at TAG, which
coming. I'm going to come and we're going to spend some time. And we could spend some time. I'm not going to blow. I hate people that blow in and blow out. I'm not going to come in and speak for an hour and then go, okay, I got to get out of here. I'd rather sit and meet a person or two and see if so what are you worrying about? Yeah. I actually, probably the greatest motivator that I've ever seen is fear. I'm always scared that somebody's going to overtake me or somebody's going to be better than I am. Fear is okay. It's just, it can't paralyze you. And I think when you're in a market like this, we have a tendency to just sort of look at where we are, not where we want to be or where it's going to go. And I think hope sort of is the antidote to fear. And you guys as leaders, me as like a help, all we're trying to do is say, okay, relax. This is going to happen, right? This is going to be there. And if you think about it, I think that's really where I've been really good, is just trying to lead companies to what that is, right? Which is just, Gretzky, my neighbor, Wayne, used to say, and he was slight. If you ever meet him, you'd think, how does this guy score like 800 goals? It's like not possible. And he always had the same line, which was, I just figured out everybody skates to where the puck is and there's a huge collision. I just skate to where the puck is going to be and knock it in the net. And then I figured out somewhere along my career that if I actually could get behind the goalie and he can't look at me, I'm winning. And they can't hit me full speed because they have to slow down to go around the corner. I was laughing going, this guy actually, and if you spend any time with him, when he was a little kid, he basically drew, he and his dad, they had this little whiteboard with a hockey rink on it. And all he really did as a kid was just spend time trying to figure out if there's 5 and 5, this is where people would naturally go. This is what I'm going to do. Well, think about that. Right? So here we are at EPM. What are we trying to do? We're basically playing hockey with a bunch of other whack jobs. We're playing hockey. They're all bigger than we are. They're all faster than we are. That doesn't mean squat.
Yeah, listen, I tell you what, anyone that's coming to TAG, if you don't come just to listen to Bill and learn, because I would tell you right now, the moment we get off this call, we're going to tell every one of our account executives in wholesale to get this episode out to every one of your brokers and LOs. If they want to win this market, it isn't as complex as they think it is. Just like with Wayne's thing, if you overcomplicate it, you're going to get crushed. If you just think outside the box, take care of your client, communicate with them, have a conversation with them. Don't end at the closing, continue the relationship. You're going to win, and you're going to win big.
And look, in TPO, I am a TPO guy, right? I came out of retail. I invented TPO. There were no brokers, you morons. right? Now you look at United Wholesale like, oh, we're going to specialize in wholesale. Okay. I was all wholesale, all purchase for 20 years. Didn't do a refi. So what's our secret sauce with our broker? I spent all my time with my brokers helping them grow their business, not talking about my shitty rates.
Right.
And my crappy programs and my bad underwriting and everything everybody else wanted to talk about. All I went in and says, Kevin, what do you want to do with your mortgage brokerage business? And right, it's like, what? I mean, and can United Wholesale do that? No, you can't really do that from a centralized facility in Michigan.
Right. Listen, this isn't at the college, but I'm leaving saying, wow, that Bill Dallas is a great sales guy. So I'm going to get you some 10, I'm going to use it now to hopefully get some 10s over here. This is 110 that's staying on this side, but I love it. I want to thank you again.
No, you're welcome.
I would tell everyone to check this out at Empowering Brokers Community on our Facebook page. Kenny and I are always available. Emails are simple, kenny@epm.net, kevin@epm.net. Make sure you're at TAG because I tell you what, I want to get off. I'm not a retail guy, but I want to go find a borrower right now and close a
Let's
loan.
go.
Thank
you.
TAG,
You're it.
That's where the buck's going to be.
Get to the event because I just tagged your ass.
Thank you so much.
Bill.
Bill, thanks again.
Amazing.
Kenny, thanks as always.
All right. See y'all.
All right, guys.
Thank you.